Asset tokenization is becoming an increasingly popular phenomenon in the fintech sphere. The practice is bringing in an increasing amount of institutional investors into the blockchain space. Finance Magnate spoke to Moshe Joshua, Chief Product Officer at Blackmoon, about his company's unique philosophy around asset tokenization, creativity in the blockchain space, and whether or not blockchain is the ultimate answer. Okay, so Moshe, can you tell us a little bit about your personal and professional journey and how you got involved with Blackmoon in the first place?
Sure, sure. It's nice to meet you.
Mm-hmm.
I've been working on Wall Street for 25 years, building all sorts of systems on the technical side, but mostly in the financial arena. The nice thing about my background has been that I've been able to work on pretty much every different type of desk, from operations and risk and accounting to the actual front office desk and the trading desks, from high frequency, low latency arbitrage to hedge fund management to cross-border arbitrage between FX and treasuries and derivatives and equities and bonds and whatnot. I had a really good background on the financial technology side of things. And I was originally invited to be the first market maker on Ripple. And we had already been looking at building a Bitcoin fund, and I was the guy who basically said, the market's not ready. I think Bitcoin was $8 at the time. So, we're talking 7 years ago now. And there was just no way to deploy capital in a real institutional way. I think Ripple was the first, eye-opening mechanism for me that showed that the blockchain is not about money. This idea of blockchain and decentralized ledgers is about, at least to me, it's about inventory management. And that experience through market making with Ripple basically turned it around. And when they saw what I had built, the Ripple guy said, how did you do that? And then when I explained it to them, they asked me if I could do it for them. So I ended up consulting for Ripple for a few years and building a lot of systems for a lot of other customers. And I think some of my software that I built for Ripple is now part of their banking products. And that gave me a really good soapbox to stand on, calling myself a crypto expert, whatever that meant, years ago. I went, one thing that I realized that was missing, that I wanted to attach myself to, is that building these systems require an ecosystem. And you kind of have to bootstrap it because it's so infrastructurally different that the whole user experience of implementing a blockchain-based system didn't really exist 5 years ago. Mm-hmm. So I actually started a company called Dash. You can check it out, dash.cash. I was the CTO there. And then when I found out about Blackmoon, I realized Blackmoon is really the thing that I had been espousing and standing on a soapbox for many years. I actually talked about what Blackmoon is doing today. I talked about it to Ripple in their offices in San Francisco, I think 4 years ago, more than 4 years ago now. The idea that it's not about currency, it's about derivatives, it's about tokenization, it's about asset management, it's about, liquidity, and all the things that Blackmoon is doing today, I think is something that really I attached myself to when I first got it started with building decentralized ledgers and market making products. So I see my career curve into Blackmoon as being fulfilled. It's almost like I'm finally getting to scratch the itch that I've had, in my head for the last 5 years.
Wow. Okay. So what is Blackmoon exactly?
Blackmoon is tokenizing fund investments. So the idea that you, as an investor, can invest directly into financial products is a little bit of a misnomer in the sense that it's not easy to be an investor. Not because of the lack of products. There are tons of products out there for people to choose from. The problem is one of access. So the idea of the way the institutional universe works versus the retail universe works from an investor's perspective is very, very different. And, regulations and compliance surrounding that is a big part of it. But ultimately, the tokenization pattern of what a token-based, decentralized-based issuance can do changes the way that people look at investments. So when you're asking me what Blackmoon is doing, you have to split up the money pie of the world into two different facets. I look at financial products as those things that expire and those things that don't. And if you look at the things that don't expire, you're really only looking at two slices. You're looking at equities and currency. Everything else has an expiration on it. And that differential is really where things get their value from. So when you think of equity and currency, I call them inflatable objects because they get their value through inflation, right? The price goes higher, everybody makes money. Whereas those things that expire, they gain their value intrinsically through decay. So Blackmoon is tokenizing fund investments for those things that have intrinsic value. Now, hedge funds are this weird gray area in between that border between those things that expire and don't. Because ultimately, you're buying equity. Like as an investor today, I give money into a hedge fund. I'm buying equity in a hedge fund as a fractional owner of that fund. But the truth is that because I can create and redeem my investment and I can bring money into the fund and out of the fund, grant it intrinsic value. So it's not only expiration that grants things intrinsic value; it's also redemption. And those are the products that Blackmoon is focused on. So when you think of a lot of the tokenization platforms that are working in a similar regulatory environment that we are in the financial landscape, I really don't see any other companies competing with us directly since they're all focused on equity-based issuances, whereas Blackmoon is more focused on intrinsically valued issuances.
I see. So if I'm a company that's interested in using Blackmoon to tokenize my assets, how would I go about doing that?
So we have an onboarding procedure. If we have a few different product lines that we're listing now, but the general use case, to answer your question, is focused more on, let's just say, for example, you're a hedge fund and you wanted to tokenize yourself. So we would look at the marketability and viability of your fund, who the management are. And Blackmoon is not this open platform for fund managers to list themselves. It's a curated list of offerings as products. I think we take it very seriously in terms of protecting investors on the platform and giving them quality investable products. So there's a little bit of a subjective decision-making going on there, but onboarding a fund would then integrate with your fund administrator, your auditors. We would set up the reporting requirements. We have a whole slew of compliance checks that we have to go through, which includes subscription agreements and onboarding Blackmoon almost as an investor onto the fund itself, and vice versa, onboarding that fund onto Blackmoon in terms of what is that fund's relationship to Blackmoon and part of our profit model. And then we go through the whole marketing campaign of putting together the financial analytics of your fund and managing how your fund's history is being marketed, including writing the white paper for your fund. And then the rest is more of a technical, operational mechanism where the token representing the exposure and the ownership of your fund and how that gets created and redeemed as it relates to a user's investment. Importantly, Blackmoon is also a bridge between the fiat and crypto worlds. So you can invest in both crypto and in fiat into those funds, whereas those funds themselves, their base currency might be specifically in fiat. So we do a lot of that conversion management as well. And that is what I would call the primary marketplace, just the listing and onboarding. But then secondarily, we are going to be offering in the next month or two a secondary market where the same way that you think of a crypto exchange as it exists today, we are going to be having that transfer of ownership functionality online as well.
So
and I think that that's really the value proposition that we're offering to that part of the financial universe,
right.
liquidity provision.
Right. So that leads me kind of to my next question, which is how can users access these tokenized assets? Is it through this kind of like online exchange platform, or how will it work exactly?
So technically today, for the few offerings that we have listed there, you can purchase an investment through a creation and redemption scenario. But it's time consuming and not, you're buying and selling it at an intrinsically valued mechanism, and there's a time gap and a time scale that you have to consider. That it's not freely available whenever you want. You have to wait until the book opens and closes.
Mm-hmm.
So that redemption timeline is limited. But secondarily, when we list our exchange, will be available for open trading for all these asset tokens.
Okay, and can basically anyone use? I mean, from an investor standpoint, can anyone use Blackmoon, or is there a minimum amount or KYC requirements?
So we are a fully compliant platform.
Mm-hmm.
All KYC and AML requirements exist. We have a whole compliance team dedicated just to that, onboarding investors. The beauty of our smart contracts are that it does control that line between accreditation and non-accreditation investors. So if there's a hedge fund out there that is listing themselves on Blackmoon that has, a threshold of X of what accredited investors are allowed to invest in their fund, whereas another fund listing themselves on the platform have, let's say, a lower threshold, mm-hmm. Those thresholds are still maintained within the smart contract, and that the transfer of ownership would not be allowed unless those investors meet the underlying compliance accreditation thresholds of those underlying funds themselves. Mm-hmm. So we're kind of sort of agnostic to that and just following along what everybody else has, whatever the underlying funds have abided for themselves. But the truth is we do have a couple of other products on the platform, mm-hmm. Actually another one importantly that we're releasing in the next couple of weeks, that are products that are being created by Blackmoon itself. And we are associating our own credit thresholds and our own accreditation thresholds to that as well. So there's a little bit of a mix of both. But for sure, Blackmoon is a fully functional financial institution in the most traditional sense, and we are abiding by all those compliance standards at the highest levels.
Can you tell me a little bit more about this product that you mentioned that you're launching in a couple weeks?
Sure. There are effectively three groups of products that are listed on the platform. The first is what we've been talking about, which is really the core use case of fund management. So fund managers list themselves for marketability, for liquidity, for a lot of other reasons, for cost, and for technology. The second product type is, you can think of it as a custodianship, where we are listing products that are reissued to investors through our platform. Mm-hmm. So today we have listed SPY and EEM, the two largest ETFs in the world. You can buy them on Blackmoon today. As well as we're coming out, I think today we're going live with Xiaomi. It's having an IPO, so mm-hmm. that is going to be listed on our platform today as well. And then the third product, which we're going to be doing in a couple of weeks, is crypto index funds. So okay. We did a lot of research as it relates to this idea of diversification. When we first started talking about Blackmoon, certainly when we raised capital in September 2017, the big idea for the crypto world, everybody's looking for diversification. But the funny thing is that there really isn't any diverse way of maintaining a risk portfolio in the crypto world because it's a one-way market. There's no real short side. Bitcoin basically dwarfs everything else, and everybody just follows along. So it's a very immature marketplace in that sense. There's no sell-side research. There's no standardization of accounting practices. There's no normalization of how to compare one issuance versus another. So there's a lot missing as it relates to the maturity of the market. And the market overall all follows each other. So, for example, there are a couple of other platforms out there providing diversification indexes, right? So things like the top 10 market cap indexes, or the we only invest in protocols, right? Or we only invest in this sector, or we have this super duper mix of alpha traded strategies that we're going to trade based on an index. And at the end of the day, if you look at all of them, they all give you the same return as Bitcoin. Give or take, 2-5%. It's a throwaway number at a certain level. So we did a lot of research and came up with our own bag of mix of, how can you look at this one-way market, this, non-diverse set of exposure risks with super high volatility, and put you into a situation where you can beat the model, right? Beat the market, have a higher risk-reward return. I don't want to say that it's necessarily a tracking index, because some of them are rebalancing daily, but ultimately these are crypto indexes that have a mandate and a set of rules. They're algorithmically driven, and users can invest in them. We released on our blog earlier this week the first 3 listings of the products that we're going to do, and we're going to expand dramatically in this arena, just because the demand for these types of products are really unbelievable. I think the recent downturn in the coin marketplace, from relative valuation, has only increased the need for people to say, what's real and what's not, because no matter where everybody turns, they just see it doesn't matter what I buy or what I sell or what I trade or what I don't. I might as well just hodl Bitcoin. It gives me the same return. So we're definitely going to be offering a lot of other risk products for people to choose from. And it's not just a matter of risk and portfolio management. It's also, fiat bridges. And there are a lot of other reasons why these coin-based products really have value and intrinsic value. I'm very much focused on that.
So do you think, that this is really like the future of assets, is that everything is going to run on a tokenized system?
No doubt. There's absolutely no doubt in my mind. I'm 100% committed to not only, buying into that prophecy, but also making it happen. That's an important, relationship that I have to my own career, to be responsible for that outcome. The truth is that the technology makes it easy for me. I don't want to say that everything needs to be tokenized. I think there's a fallacy in the environment that we're seeing today, that people don't question themselves with a very important question. Well, the question is, why blockchain, right? Companies come out and they just don't ask themselves, why are we using blockchain? As of today, in today's universe, and where we find ourselves with Ethereum, ERC20 tokens as the go-to standard, it's harder to work with. It's onerous. It's very hard to find developers who can work in Solidity and actually build complicated systems.
Mm-hmm.
It's not. There are latency objectives that are not being met. There are throughput objectives that are not being met. There are a lot of reasons. There are more reasons to not use blockchain and just to build your own system, unlike some node-based, AWS, just your own data set and your own API.
Mm-hmm.
It'll work better, cheaper, faster that way than to build a blockchain-based system. I think people today are not asking themselves enough of saying, what am I doing that actually requires blockchain? That if I don't have blockchain, I can't build my business model the way that I want to do it.
Right.
I think that's really lost on everybody.
Mm-hmm.
So when it comes to the tokenization of financial instruments, I just see it as the second wave of blockchain mainstreaming itself. So the first wave really comes from the idea that the white paper of Bitcoin showed the world that you can create a digital object that is not copyable. And by, maintaining that standard of non-duplication from a digital object standard, one that's internet-based, I think that showed everybody that you can create a denominator of value. So, you have 1 over 100 issuances, right? And that denominator is fixed, or at least it's controlled. So once you start thinking about a controlled denominator, the definition of that is a float. And once you start talking about a float, you immediately fall into the category of currency. So I think the first wave was, it's a currency, right? Or it's a commodity, or it's a this or it's that. The point is that it's just another relatively valued object, the same way we think of currency, dollars, euros, whatnot. Now, dollars, euros, Bitcoin, right? It all falls into that category. I think with the advent, Ripple had the idea of customized currencies. You have ERC20 tokens. Now you're going to have the next standard and the next wave of EOS and CON and those types of systems coming up. And I think there's a number of them coming up now. I think the next wave that we're seeing right now is the idea of tokenization, which is something that I always saw from the beginning of Ripple, mostly because of my background in building derivative market systems. I remember I had this very distinct memory where when I finally started to understand what Ripple was really possible with, in the idea that you can create a decentralized ledger with your own customized issuance, and call it whatever the hell you want. It's still managed. I realized that if I took 20 years worth of systems that I built and just replaced it with Ripple, they would be better off. All of them. That was a very humbling idea, and that was a very powerful recognition of saying there's a future here that I need to be focused on. But I think that this second wave of tokenization has only started now. Specifically to your question in the financial arena, I think that there's something lost on everybody as it relates to, blockchain and finance, in that when you think of creativity as a programmer, as a technologist, most companies, like social networks and whatnot, can be creative as they want, right? What should we do? What would be a cool experience? What would be a useful experience for our users? And everybody comes up with all these wacky ideas, and then they roll it back and self-regulate about what we should not do. So a good example would be Facebook not allowing porn, right? They could do it if they wanted to, but they don't for self-regulatory purposes because it's a brand's protection or whatnot.
Right.
I think specifically in the financial arena, it's the exact opposite. You have this toolbox with all this functionality on the technical side, but we're having to squeeze it into a box. It's a square peg in a round hole that doesn't really fit. And more importantly, we have more functionality than the box of regulation allows. So it's very limiting, meaning we're starting using blockchain with a straitjacket. But I see that as an opportunity because I realize that we've brought it to the edge of what the financial regulatory compliance arena allows us to. Mm-hmm. And then as that box expands, which it will, as it always does, regulation always follows technology. As it expands, we'll just be ready, and it'll just be immediately applicable. I think the difference today is that historically there's been this leash of about 10 years between technology and regulators, where technology pushes the boundary just a little bit, and regulators say, "Oh, there's something else that we have to, shore up and protect investors with." So they'll tweak some of the regulations and update it, and then everybody starts at the new line in the sand. I think blockchain has changed it to the extent of control. I'll talk about that in a minute. In that it's broken the leash and just run away with it. Because this idea of blockchain and the borderless environment in which it resides, because we're really talking about value on the internet and the internet of value. Regulations are born from the borders of the governments that they are able to control. That's the whole idea of governance, certainly in the real world. But, when we're talking about a borderless value environment, regulators don't have the tools to control that. It's not that they shouldn't do it. It's not that they don't want to do it. It's that they can't do it. And that's where we're finding a lot of friction. And it's going to take time for the traditional regulated authority to come to terms with the new borderless environment. And that is also borne on us, building these systems, and that we still have to work within those regulations, no matter what they are, whether we like them or not. That is what the financial arena is. So I think that the other important thing to mention on this topic is also regulators have the most to gain from the technology, more than Blackmoon or Blackmoon's competitors, and more than any of the tokenization ideas out there, because regulators, their main job is all about protecting the investors, and by tracking and researching those companies that are being usury or are the bad actors. So, tracking things on the blockchain just become a lot easier because there's a lot less middlemen that are required. The whole cottage industry of protecting an investor's investment, the threshold of that protection operational mechanism is lowered now, because you don't need to have people, brokers and administrators and compliance directors and auditors in place in order to track money flows as they go from bank to bank, or as they go from exchange to clearer to custodian. All of that goes away because we already know that it's already public on blockchain, and that proof of history is already there. So regulators have the most to gain from it. I think that they understand that. I just think that there's a problem with how do they control that in a borderless environment. And, going back to your original question, I realize I've been talking a little bit too long here.
No.
The financial arena doesn't really have the ability, or the financial technologists do not have the ability to be as creative as they'd like to be. And the straitjacket and the rule sets that bind us are really what drives us forward in terms of how we operate. And Blackmoon is no different. Blackmoon has to abide by those regulations and compliance directives that we find ourselves in.
Okay.
From my friends' perspective, I'm the blockchain guy, and they'll all ask me the same question: "Hey Moshe, what ICOs are you investing in?" And I tell this story to everybody, and it basically goes like this. The first answer I tell them is, you're a big boy, you figure it out. I'm not your broker. I'm not giving you investment advice. I'm not taking on that responsibility, and you're not paying me for it, so screw you. The second thing I say is, just, you're my buddy. Before you go do something stupid, let me just ask you a question. ever invested in a company as a seed capital investor? No. Do you know anything about venture capital? No. Did you meet with the management? No. Do you know anything about the product? No. Do you know anything about the industry? No. And it just goes on and on. It becomes comical at a certain point.
Mm-hmm.
But their answer, to me, makes them right and me wrong.
Okay.
Because the finality of that conversation always comes down to the same thing. Hey, Moshe, look, if I'm wrong, I can just sell it at a little bit of a loss. So what's the worst that can happen? I'll lose 10%, 20%, 50%, right? It doesn't necessarily matter whether I'm right or wrong. What matters is that it's liquid. So there's this idea of lowering your risk threshold through liquidity.
Mm-hmm.
Liquidity opens up pockets. Mm-hmm. It makes it easier for companies and for fund managers to raise capital, just because investors don't see this idea of lockup being a part of, the drag on their own cash, right? So the liquidity option is really the macro view of, micro investments, for example. Mm-hmm. It's not just about lowering the accreditation threshold into more of a retail investable arena. It's also this function of, well, I don't have to give you money and keep my fingers crossed for the next 2 years or 10 years, depending on what type of fund you are, hoping that you're going to make me money so that, when the rainy day comes, I still have the ability to just take a loss and, fix my boiler or buy a house if it comes up, in 3 months from now, the unforeseen event. I think that is loosening the purse strings and liquefying the marketplaces. And the idea that assets can be tokenized in a platform that grants users liquidity in what is traditionally illiquid, right? Hedge funds, real estate funds, venture capital, they all have liquidity issues. And there's a lot of reasons why those liquidity issues happen. And I don't think tokenization solves 100% all of those issues just yet. Mm-hmm. But I do think that tokenization pattern, as it relates to liquidity, is changing the mindset of what is an investable product and why do people invest in things that they may or may not know about from, or needed to know about. I think that's an important standard that's happening. I'm not sure if that's a good thing or a bad thing, but it's definitely, and there's definitely like a dark side to that, as we can see in a lot of the ICO failures and the fraud that's occurred over the last few years. Mm-hmm. But I think, going back to what we were talking about before, those regulated standards and the compliance arena will fit the model and will come up with solutions to, continue to protect investors in that way. Mm-hmm. But I really think liquidity is the core of everything related to tokenization. And again, this is just the second wave. I think the idea of identity on the blockchain and supply chain economics, is like another wave coming that is going to have major ripple effects to the economy at large. Mm-hmm. Because those, bigger concepts of, publicly visible and verifiable transactions on a public decentralized ledger that nobody owns changes the way businesses run. Mm-hmm. I think that's like the next third wave after finance. So it started with money. Money is banking. Banking is, investments. That's where we are today. But the real promise of what, blockchain has promised for a long time, I don't think that we've actually seen that yet. Certainly not in the mainstream arena.
Right. Okay. Well, yeah.
So I'm very, let's call it hopeful still.
I am too. Yeah, Moshe, thank you so much. Really, really fascinating stuff.